Hey guys, welcome back to FiscalVoyage. My name is Felix, and in this video we're going to talk about the 5 best high yield stock for 2020. All of these stocks have a decent payout ratio of under 60%, 50%, 40%, so the dividend is well covered, and they all have dividend yields at over 5%. And the best part of this dividend yield is the fact that they all are growing the dividends at a very nice rate, and they've been growing it for a long time. But before we get started with the 5 best high yield dividend stocks for 2020, make sure if you're new to the channel to subscribe to the channel and check out my free ebook in the description below, 5 quick metrics to look for before spending your time in any particular company. So here's the first top 5 best high yield dividend stocks for 2020. As you can see here, Group, ticker symbol UNM. Currently the price is at $17.68. Expected earnings, forward earnings at $5.19 a share, giving it a PE of only 3.41. That is extremely low PE ratio based on this earnings and price to earnings ratio. The dividend is currently at 1.14 and the yield at 6.45% currently as today or Friday's closing price. And you can see here the company has a very low payout ratio of only 22%. They've been growing dividends for 12 years and a 5-year growth rate of 11.9 or 12% for the past 5 years. And you can see here the dividend yield average has been much lower than the current yield. Let this load here. You can see here the current yield at 6.45, and the past 4 years it averaged 3.17. So it's almost double or more than double than the 4-year average. And you can see here the yield was always low in the low 2s, and then just started to pick up, and then with the economic shutdown and stuff, it got as high as 10% dividend yield. But right now you're getting at 6.45. Let's look at the valuation on Fast Graph. You can see here earnings has been growing very nicely throughout the years at a nice 4%, 11%, 7%. Last year it grew it by 5% in 2019. This year they are expected to be down by 4%, but picking up 3% and 10% for 2021 and 2022. But the black line is the monthly closing price, and you can see here again the low PE of 3.36. It had an adjusted earnings yield of almost 30%, which is outstanding. S&P credit rating of BBB, which is investment grade, and a low long-term debt to cap ratio of only 23%. If we shorten this time period here, you can see the company tends to normalize at around a PE of 8 to 9. And if it were to revert back to that 8 to 9 PE ratio, you could have a total annual rate of return of 66.1% or total return in the next 2 years of 212%. So this right here is definitely one of the top high yield stock for 2020. The next high yield stock for 2020 is Atera Group, ticker symbol MO, currently going for $38.97. You can see here a low PE of 9, and we'll compare it to this normal PE or the average PE of the past 5 years and 10 years. It has a very high dividend yield of 8.83. Earnings are expected to be at $4.31, and they're only paying out $30.44. So that means the dividend is covered with earnings. You can see here it does have a high payout ratio, but it is covered at 80%. 5-year dividend growth rate of 10%, and they've been growing dividends for a whopping 51 years. So this company has been growing dividends, I'm sure, older than a lot of you guys here. That's definitely older than me. So that's outstanding there. And you can see here the dividend yield is very high compared to this 5-year average, where before it was yielding around 3 to 4% dividend yield, and now it's doing an 8.83 versus a 4-year average of 5. So it's almost 300 basis point higher. You can see here it's got as high as a PE of 10.25 at March 23rd. Let's look at the valuation on Fast Graph for Atera Group. You can see here earnings has just been outstanding. Just growing. The green dots represents my buying of the shares. So I bought it here originally, and then I bought more here, and then I've been buying on the way down. So I am under here, but I'm expected, you can see here earnings are expected to grow 2%, 6%, 5% going forward. The high dividend yield, so I am collecting the dividends and reinvesting elsewhere. The company has an S&P credit rating of BBB. Investment grade. It does have a high debt to cap ratio of 80%, so that's concerning there. But overall, you can see here the companies has continued to grow earnings. You can see here the dividend yield of 8.83 has a blended adjusted yield of 11. And if the company were to go back, not even to the mean of 17, just to a PE of 15, you have a 38% annual rate of return and 100%, over 100% rate of return for the next year or two. So that's outstanding, all while you're collecting this high, safe dividend. And they, I think they announced an increase earlier this year. Yeah, they did. You can see here $3.41 compared to 2019, $3.28. So overall, this is another high yield dividend stock for 2020. So let's just look at the third one. The next high yield dividend stock for 2020 is AT&T, ticker symbol T. I'm sure you guys heard of this company, probably even own it in your portfolio. Right now is an outstanding price at $28.68 with a dividend yield of 7.25%. So even if the company stays flat at this price range, you're collecting 7% plus annual return with a dividend increase of about 2% every year. And you will look at, you can see here earnings are expected to be at $3.19 with a forward PE of 9. And dividend rate is at $2.08. So the dividend is covered. You can see here payout ratio of only 66%. Been growing dividends for 20 years. 5-year growth rate, like I said, is 2%. They've been growing dividends for 2%. And we look at the average dividend for the past 4 years, average 6.1%. And right now you're getting a better dividend yield at 7.25. You can see here as it's got as high as 7.66, so it's almost right there. So it's a great buying opportunity, in my opinion, right now for AT&T. Let's look at the valuation for AT&T in the fast graph. You can see here there's been some erratic earnings throughout the years for AT&T, but in 2010-11 they've been growing it quite nicely since then at about 8%. They didn't grow in 2014, but 8%, 5%, and 15% in 2018. And even though they grew it at 15%, the stock went down, as you can see here, for 2018. But right now, they are expected to lose earnings, a drop of 11% from $3.57 to $3.20 for 2020, but picking up nicely at 2021 and 2022. But let's look at the valuation. You can see here the company has a blended earnings yield of 11.5. Again, the high dividend yield of 7.3. Triple B investment grade rating, 47% long-term debt to cap, which is modest. It's not high, but it's not low as well. It's a decent for this size of a company. You can see here, if we were to revert back to the mean of 12.7, we'll have a total annual rate of return of 25.4% for the next 2 years and a 66% total return overall with dividend and the price appreciation. So this is the third stock for the top dividend yield for 2020. So here's the fourth top dividend yield for 2020. Prudential Financial, ticker symbol PRU. The company is currently going for $63.88. Dividend rate at $4.40 with an earnings of $9.52, giving it a PE of 6.7 and a high yield again of 6.9%. Currently, and you can see here the company has been growing dividends for 6 years, 5-year growth rate of 13%, a decent payout ratio of 46%. So overall, the dividend is covered and growing. Let's look at the fast graph for Prudential. You can see here there's been erratic earnings throughout the years, but the trend is up. So that's very positive. And you can see here earnings were down or expected to be down for 2020. From $11.69 in 2019 to $9.36 for 2020, so 20% decrease in earnings, but picking up very nicely in 2021 at 23% and 14%. Again, the green dots represent my buying time, so I'm slightly, I think, under here, but about a few percentage points. But the company does pay a nice yield, earnings yield of 15%. S&P credit rating of A, investment grade, high quality credit rating. 21% long-term debt to cap, outstanding. If we look at the shorter time frame, if the company were to revert back to the normal multiple around 9, you could see a potential annual rate of return of about 38%. Total rate of return of 100%, over 100% in the next year or two. So that's very positive news. So overall, you can see here high yield It's very covered by the earnings and free cash flow. The blended P of 6 versus the normal multiple of 9 means the company is undervalued, and this is why it's one of the top 5 high yield stocks. So let's look at the fifth one. So the fifth and last high yield stock for 2020 is ADBV Inc. Ticker symbol ADBV or ADBV. $86.12 as a Friday closing price. So it's been dropping as of high. You can see here it's gotten as high as $100. So it's now at 86. So it presents a great buying opportunity. Has a yield of 5.48. Earnings expected to be $10.44 with a dividend rate of only $4. So their dividend rate is less than half of the earnings. Forward PE currently at 8.25. If we look at the dividend thing here, they have a payout ratio of only 45%. They've been growing dividends outstandingly for 20% for the past 5 years, and they've been growing it for 7 years consecutively. If you look at the dividend yield, the 4-year average is 4.29, and right now you're getting 5.48, so that's a good indicator that the company may be undervalued. It's got as high as, let's see what we can get here, 6.5 on March 23rd. It's getting almost at 6 right now. If it goes to 6, try to go all in, because you can see here whenever it hits 6, it's only for a short period of time, and then it's coming right down from there. So if it's getting closer to 6, buy. And even at current price is a buy. And we'll look at that here at Fast Graph. You can see here earnings have been growing very nicely throughout the years. 2015 it grew by almost 30%. Last year it grew 13%, and this year they're expecting to grow 17%. Even with all the things that's going on with the economic shutdown and such, they're expected to grow earnings at 17% and 70% in 2021. That's outstanding growth for this low PE ratio of 8.5. Blended adjusted yield of only 11.6, outstanding, and you see the dividend yield at 5.5. Credit rating of BBB plus, investment grade. Again, this company has high debt, long-term debt to cap ratio of 80%, so that is concerning. But they are technically, taking care of the debt level. And if we just shorten this time period, you can see here the earnings are, if the company were to revert back the normal multiple around 12 or 13. You have a total annual rate of return of 41%. That's outstanding. Great potential of high return. And while you wait, you're still collecting a growing, very growing dividend, and the dividend yield at 5.5%. So that's outstanding. Total rate of return potential of over 119%, which is great. So this is the fifth company, ADBV, that I think deserves to be in the list on the top 5 best high yield stock for 2020. So there you have it. Those are my top 5 high yield dividend stocks for 2020. Let me know in the comments below what's your thoughts, or what are your top 5 high yield dividend stocks. Some of these companies I may have not heard of and such, so I like to hear from you guys. What do you are looking at? What high yield stocks are you looking at, and things like that. And make sure, if you're new to the channel, to subscribe to the channel as well, and like this video if you enjoyed it, for the YouTube algorithm, so more viewers could see these top 5 high yield stocks. And again, thank you for watching, and I'll see you guys in the next one.